Well, look, and this is our stock of the hour, quite literally, because Birkenstock has begun trading. I think what is going to be notable, as everybody was waiting for that open, is the fact that the first trade was at 41 bucks. This deal got priced at 46. So you're talking about an 11% decline for the open. And the Bloomberg team was very quickly looking at the data surrounding this. And ultimately, if you're looking at the data that Bloomberg compiles, this technically is the worst opening for a listing of $1 billion deal or more in New York over the past couple of years. Adding to that, Matt, out of more than 300 U.S. IPOs of that size in the past century, only 9 have fared worse. Now, obviously, we've got the rest of the trading day to get through here, but we want to get some instant reaction to it as well. Jessica Ramirez has been tracking this story and is kind enough to join us today. She's a senior analyst at Hali and Associates. Jessica, let's just start with this negative reaction to a very high-profile deal and your thoughts on that.
Yeah, thank you for having me. Yeah, so I'm not surprised. I think this IPO, if you see at the time it's entering, it's quite a volatile macroeconomic environment. The consumer's being pressured by a lot. And so if you look to the consumer discretionary category, we've obviously seen some decline with the consumer being very cautious in the way that they're spending and which categories they're spending. So I'm not surprised to that reaction. However, we do still see that Birkenstock is a very good story. We're happy with the way it sits in the footwear category and in the category of comfort, which the consumer has continued to spend on, and that has continued to evolve. So the story of Birkenstock we quite like. Understanding what's going on in the market within consumer discretionary obviously has been very volatile, so not surprised with that open.
Is it concerning to buy a stock like this when it's at the peak of its fad, Jessica? Because right now, you know, everybody and his brother loves Birkenstocks, but there are times when these Jesus sandals aren't quite as popular, obviously, and you can see with other stocks like Crocs, which right now is doing fairly well, or a Heelys, which was obviously, you know, is no longer even trading, where it's been a mistake to buy at the top of the hype.
Yeah, so I think Birkenstock is a good story, and the reason why we like it, I don't see it to be a fad. It has been a trend that has been actually growing pre-pandemic, which I think many people say, you know, pandemic was really where we saw comfort, but in reality, we saw comfort ahead of the pandemic, and it only strengthened during the pandemic. Now, a story like Crocs and a story like Birkenstocks, I do refer to as, you know, the ugly footwear that became fashionable, and it has become fashionable. It's really been elevated. There's been all these collaborations that have created momentum across the core assortment that they have. So they've had collaborations with Dior, they've had collaborations with Manolo Blahnik, Proenza. So the list is actually very strong. And when you do that as a brand, what you do is you create a halo effect. And the person who, or really the brand who is key in doing this, and they're taking that retail playbook, has been Nike, then it was Levi, then it was Crocs, and we've seen Birkenstock do that as they were not a public company, because you see the way that the customer has really leaned to them. And the positive part about Birkenstock as a company, it's a heritage company. So usually, even at a time when a consumer is watching what they're spending, they're going to go to a brand that they trust. And Birkenstock is really bringing that to light. You know, it's a company with a lot of history, a lot of comfort in its say that you could say this is going to last me for some time, so the customer will spend on that. The difference between the Crocs and the Birkenstock story is really the price point. Obviously, Crocs is on a much cheaper. Birkenstock is much more at a higher price point by a bit. But overall, I think it's not a trend. There's a lot of strong fundamentals in the products and in the way that they're handling their story as a retailer.
So I guess maybe if we ask the question a different way, Jessica, beyond just comparing it to other footwear makers, we mentioned earlier that the sales picture at LVMH, obviously the name in luxury, did not satisfy Wall Street today. And obviously there's an LVMH connection to this deal, and that Bernard Arnault's family is a key investor in the Birkenstock business. What does this reaction say about the appetite for luxury brands if, broadly speaking, they're relatively well positioned in a consumer slowdown, but if generally people are a little jittery about consumer demand right now?
Yeah, so I think luxury, if you look to, and especially LVMH has been very strong in their reporting in recent earnings, and in the past few years, luxury has come off really strong. So they are also up against, right, tough figure. So I think that also has to be taken into consideration. Now, in the US, we've seen it to be quite difficult of an environment. Europe is starting to slow down. And I think, it's been very questionable to see how China will play out in the luxury sector and consumer overall. So there is, questions of how does the consumer spend luxury end or at the low end for the second half of the year going into holiday, and also what does that look like for 2024. So again, just a lot of volatility in general, and I think uncertainty, which makes sense.